China has been and still is the emerging market to do business with, but as its economy starts to slow down, other countries are getting a chance to shine.
The emerging markets are taken to mean the non-G7 or G20 countries. G7 means the 7 largest economies on the planet. G20 is the 20 largest. We are finding here in the UK that we are buying less cheap goods from China. We're now buying them from other economies, so if you buy a shirt that 10 years ago was made in a Chinese factory, you'll probably find today it was made in Pakistan or even Ceylon. So China has moved, and that is affecting all the emerging economies as well. They have an opportunity to replace China as that center of production, but they are also affected by the reduction in the cost of commodities that results from China being less a consumer of global commodities.
And going forward, these are the emerging markets to keep on your radar.
I mean, what we're seeing in terms of growth forecasts, India, our growth forecast is relatively strong, although that has risks as it transitions in a similar way to China needs to transition, although there are some very specific issues in both of those economies. The kind of growth in places like Brazil are places that maybe 12 months, 2 years ago we would have said were perfectly ripe for expanding into for the UK. Now they're looking less appetizing.
Many people are watching India, but other economies such as Pakistan, Ceylon, which I've mentioned, South Asian countries that have already emerged that were once the frontier markets like Vietnam and Laos and Cambodia, but also new countries that, because the political doors have opened, like Iran, these are the areas where people are looking for opportunities now, and I think some of them are going to be particularly interesting.
Emerging markets covers a broad area, lots of countries and currencies to keep track of, but luckily you can do all that on the invstr app.
Keep an eye